Walmart getting downgraded today to outperform from strong buy over at Raymond James. The firm advising investors take some chips off the table. And that is one of our calls of the day. This downgrade coming after the stock posted its best day in 9 months just yesterday following second quarter earnings and same-store sales growth that beat expectations. Dr. J, you love Walmart. Why?
Well, I loved it, Mel, because there were so many folks that were buying ahead of the earnings yesterday. Now, there were even some, of course, buying and covering some of the shorts, probably, I guess, chasing it up those $9 that it was up yesterday. But this is a strategy that Amazon cannot do yet. When Walmart, basically, one of the big drivers for them, Mel, was that they say, oh, do you want to pick it up in store? And many of us would say, nah, I'd rather have you ship it to me through Jet or whatever. But those that do want to pick it up in store are buying the rest of the things. It's almost that point of sale when you get to the cash register. So this is something that has driven significant volumes, upside sales here. And, you know, Whole Foods with Amazon is like $4 billion versus these guys on the food side, which is, you know, closer to 30.
The concern here near term, at least, is the spending that Walmart is required to do in order to keep up these initiatives. And also specifically for the Raymond James call, the drag that Flipkart is going to have in the next couple of fiscal years. So in the next couple of fiscal years, it's going to see a drag, and they see that 4 to 5 cents a month on earnings.
You know, I'm just thinking back to the Jet acquisition where everybody said they overpaid and they were worried about that, and they just absolutely killed it. So, look, I mean, if somebody wants to say trim Walmart because of profit taking, that's fine. But I think this is a double threat here. One, you've got the in-store presence for people who want to shop in the store, but they are the #1 online competitor to Amazon, and there's no question about it. So you look at their valuation versus Amazon, it's 1/5 of the valuation. I think you stick with Walmart here.
Well, and one of the things that I'll say on that is the Flipkart acquisition, I think, is really underrated. Of course, they have to spend money up front, but long term, this is exactly going right after Amazon. This is keeping them competitive. To Jim's point earlier, every move they've made has kept them competitive and in the game, and the Flipkart is no different. Yes, they were. If you remember last earnings, they were punished heavily for spending money on Flipkart. The stock has responded 100%. You know, highest level, I believe, in 9 months. So I don't think there's any reason to let you, if you believe in this story, to let that slow you down.
Quick on discretionary.
So just the retail sector, we bought it. We're staying long that. This is all about the consumer as it relates to wages, credit, and confidence. And I will tell you that I think that remains intact through year end and the holiday season. So we're staying long.